G'day ladies and gentlemen, welcome back to another Bitcoin video. We saw the FOMC decision, we saw a 25 basis point hike, and on the back of that 25 basis point hike, we've seen a small rally for Bitcoin, but ultimately no real breakout out of the range yet. Now, I'm going to be looking into that range, what the important upside level is, and that's 25k by the way, and what the important downside level is, and that's 21.9k, why those levels are important, and what happens if we break them, okay? That's the first topic. Now, the second topic is even more important, okay? And this is a very critical topic. Why, in my opinion, okay, will Bitcoin not go down even if there is a recession? That is what I'm going to be discussing. I don't think there is enough evidence to support the claim that Bitcoin will be dragged down by traditional markets even if there is an actual recession. I seriously don't think Bitcoin will be going down, right? And it's a bit more than just, oh yeah, the 4-year cycle theory. I've gone over that many times. It's a bit more than that. We'll get into all that in just a second. Without further ado, check out the VIP group in the pinned comment description below. We've got the results down there. You can see what we've done in the past, and you can see what the group is all about. And let's get into the video. So we saw a 25 basis point hike in the FOMC decision yesterday by Jerome Powell. Jerome said, like usual, he will continue raising, the Federal Reserve rather, will continue raising rates until inflation is under control. The good part about that claim is that inflation is coming very quickly under control. It's dropping down very rapidly. We had a 0.6% drop in the last CPI decision, so CPI release, I should say. So inflation is coming down rapidly. The inflation top is in, and inflation, is dramatically trending downwards. And this is reflected by the magnitude of the rate hikes that we're seeing in FOMC, right? We've seen a 75, the last 3 hikes have been this. In fact, we'll bring up the chart so we can show you. All right, the last 3 hikes on FOMC have been, let me bring it up, a 75 basis point hike. Okay, we saw a 75 basis point hike here, okay, from 325 to 4. We saw a 50 basis point hike from 4 to 4.5, and then we've seen a 25 basis point hike from 4.5 to 4.75. What this means, okay, is essentially, yes, rates are still rising, but that trend, 75, 50, 25, what does it mean? It means they're decreasing the magnitude, they're decreasing the severity of the rate hikes as we continue hiking, which means the Federal Reserve understands that basically the necessary response that they're taking right now is the justification for that necessary response is coming to an end, meaning basically they're going to be pivoting shortly, okay? And the market is expecting a pivot shortly. If we look at the actual expectation chart, some people are saying there's going to be 2 more 25 basis point hikes. Okay, well, let's look into that claim a little bit. There's going to be an 85% chance of another 25 basis point hike in the next meeting in March 2023. Okay, so March 22nd this year, 85% chance of 1 more 25 basis point hike. That will bring us to 4.75 to 5, so 500 basis points. Then in the next meeting after that, on May 3rd, you can see the probability is that we will remain at 500 basis points at a 56% probability. So actually, the most likely scenario for the FOMC, the most likely scenario for interest rates right now is actually topping out in May. We're going to see 1 more 25 basis point hike, and that's going to be it. The most likely scenario, according to the market expectations, which is all we have to go off, by the way, is we top out after 1 more hike. So what does this mean? It means it gives the market and market participants a lot of room to move, right? Because look, people in the market, they don't react to current situations. They react to situations they deem to be the future. Okay, so if you can see in the future, say for example, you're a market participant, you got money, you're ready to buy in. You can see right now everything looks bad, but in 3 months, everything's going to look good. You're going to buy in right now, right? You're not going to wait until 3 months from now when it looks good. You buy in before everyone else. The market is foreshadowing the future. So if people see that a pivot is coming, okay, they're going to react now. And this is one of the reasons we've seen some relief in the markets, and one of the reasons why the S&P has continued to the upside, even in wake of a 25 basis point hike. Because everyone's saying, oh, but it's a hike, rate hikes are bearish, rate hikes are bearish. It's like, yes, but you don't understand, sir. Markets don't move with the current trend. They move with what they see in the future. They forecast the future. People are seeing, okay, yes, right now it doesn't look good, but the fact that we're seeing a 25 after a 50 and a 75, and there's only going to be 1 more 25, that's pretty damn good because it means the end is near. Okay, so that's why the market's pumping. Now, this doesn't necessarily mean we won't see a recession. This doesn't necessarily mean the bottom isn't in for the S&P. We're looking into all of that in a second. But I think it very much does support Bitcoin and the argument that Bitcoin bottom is in. We'll look at that in a second. But before we get into that, we need to look into short-term price action. Upon the rate hike, upon the 25 basis point hike, we saw a small pump on Bitcoin, ultimately bringing us to the top of this range here. I've slightly extended the range. Now, the two critical levels we're really looking at are between these two pink lines, the top one being at 25K, the bottom one being at 21.9K. If we look at the daily chart on Bitcoin, we can understand where those lines actually come from. 21.9K is just a basic horizontal resistance zone, support zone, I should say, sorry. And 25K, if we're looking at the weekly chart, is where the 200-week SMA, the 50-week SMA, and the 200-week EMA are kind of coming together in a conglomerate and forming a major resistance area. 25K is a very major zone. I made a video about this 2 days ago. 25K is going to be a very tough zone to get through, but if we do get through it, the bearish argument completely falls to pieces, even more so than it already has, right? You don't break 3 major moving averages if the bottom's not in. It just doesn't happen. You know, in conjunction with what else has happened, which is a lot of things, which I'm not going to get into, but we've discussed that really extensively, right? So 25K to the upside is very, very, very important, and to the downside, 21.9K, losing that will bring us down to this green box here at around 19.5 to 20K, which, by the way, would be a healthy correction. It wouldn't even be that bad if that happened. We haven't corrected once in this entire move up after seeing the second biggest January in Bitcoin's price history. So, you know, it wouldn't be bad to correct here. I'm not going to try. I've maintained my opinion on this for a long period of time here for basically the entire time we've been in this range. I'm not going to try and predict short-term price action. It's not worth it. The TA hasn't been working on short-term. I'm waiting for a break of the range, either above 25 or below 21.9. Yesterday I said above 23.8. I've changed my opinion on that, and the reason why I've changed my opinion on that is because if you actually zoom back using this horizontal red box and look at where this box takes us, you can see it actually extends upwards to 24.3. And, you know, waiting for a break of 24.3, right above us is 25. So the new range, in my opinion, is actually 25 to 21.9. If we don't, you know, so long as we're between that range, 22K to 25K, I don't care what happens with short term. I'm not going to try to predict it. It's clearly not working. You know, if I really had to try predict it, and again, this is rough, I would say we go downwards, and that's because we're in an ascending broadening wedge formation. We've got bearish divergence on the RSI, volumes rounding out of a daily chart. There's many reasons for that, but ultimately, you know, again, we're in a strong upwards trend, one of the strongest upwards trends Bitcoin's seen since like 2020. To try and pinpoint when the reversal is going to happen, stupid. Just wait for the reversal to happen and then react, which is what would happen at 21.9K. And if we were to continue, it'd be 25K. So that's the first part of the video. I want to quickly look into the Bitget Exchange, and then we'll get into the major part. The major part of the video is essentially, you know, if there is a recession, here's why I think Bitcoin won't get dragged down, which people disagree with me on, but I'll tell you why. So before we get into that, check out the Bitget Exchange, best exchange of the cryptocurrency market. I'm not just saying that. I've tried many different exchanges in my time trading. I've been using this exchange for over a year now, 5 times lower fees than Binance. If you sign up using my referral link, you get access to a 15% discount on fees and exclusive rewards in the reward center, and, you know, exclusive monthly discounts based on my partnership with the exchange. So the best way you can help the channel and help yourself as a trader is signing up using my referral link. They do partnerships with, you know, they recently did a partnership with Messi, the football player, FIFA World Cup kind of stuff. They've got a protection fund in case something like FTX happens. You can claim back your funds, and ultimately it's non-KYC, so you can sign up from anywhere in the world. Check it out. Referral link, pinned comment description. Let's get back into the video, guys. Okay, so there's an argument to be made, and it's certainly not a false argument. It's certainly based in reality. I'm not denying that at all. There is an argument to be made that the S&P 500 is not bottomed out yet. I'm not going to go into why this argument exists. Everyone knows it by now. Basically, if you want to really hammer it down to one word, the word is recession, okay? Recession. In a recession, you don't see the S&P 500 pump, that's for sure, okay? So if this does go down, if we do see a recession, which isn't actually guaranteed. As much as people like to say on YouTube that it is, it's not guaranteed. It's not certain, okay? But it could happen, okay? So if we see a recession, if the S&P goes down, if the traditional markets in general go down, if the bottom is not in on traditional markets, does that mean Bitcoin will get dragged down? That's the assumption a lot of people are making. They think the Bitcoin bottom's not in because the S&P is going to go down and traditional markets going down. We're going to see a recession. No one's going to have any money. That's the argument people are making for the bottom not being in. I disagree. Here's why. There's three reasons, one of which is a weak reason that not many people like me to hear about, but I'm going to say it anyway, and the other two unique reasons that might actually change your mind, okay? First reason is 4-year cycle. Why do I say 4-year cycle? Because it's the strongest trend on Bitcoin. It's a 12-year trend. It's been happening, 11-year trend now. It's been happening since 2012, since the first halving. It's based on 4 micro trends and the presidential cycle, so it has basis in traditional markets as well. We've also seen that even during the top here in the bull market, okay, while the S&P was going down for another 2 or 3 months, Bitcoin was down 40% by the time the S&P 500 dropped. What does this prove? It proves that Bitcoin can show a degree of distance from traditional markets, and it did it for 3 months. Okay, it dropped down 40% while the S&P was still rising. It can certainly do it to the other way, right? And it's already doing it, right? We can see that, Bitcoin bottomed out with the 4-year cycle theory, basically to the T of the prediction of the 4-year cycle theory. Yes, it's not confirmed bottom yet. We haven't confirmed the bottom, but it is pretty reassuring to show it following it. For all intensive purposes, based on the charts alone, we have no reason to believe Bitcoin's not following the 4-year cycle theory, and that's reassuring. So that's the first reason, and a lot of people think, oh, well, the 4-year cycle is not going to hold up in a recession. And okay, sure, I think that's a decent point to make, although the trend is your friend until it ends, and so you're kind of ignoring that fundamental piece of the investing advice. It's completely fundamental, right? You can't just ignore trends, especially when it's a 12-year trend that's based on 4 date ranges and a presidential cycle theory as well. So it's not exactly just something that's just a line on a chart that's, it's just a line and we can break it. No, it's actually got basis, right? But there's 2 other points, okay? So some people don't accept that, that's fine. There's 2 other points. I'll start with this one, okay? Global financial crisis, okay? What is Bitcoin? Bitcoin is essentially digital gold. It's digital gold, okay? Everyone sees it as digital gold. People who invest in Bitcoin, long-term investors, institutions, corporate, it doesn't matter. They all see it as digital gold. They invest in it for the same reason they invest in gold, for a degree of distance from traditional markets, an alternative, right? And an alternative investment. That's why people invest in Bitcoin. So Bitcoin is much more comparable to gold than it is to something like a stock, okay? What did gold do during the last recession? Gold, during the last recession, ultimately went down for a few months and then went upwards. Why? Because people realized that, hey, the economy's not very good right now. Everything's trash. They lose faith in the system. They lose faith in centralized structures. They buy something slightly more decentralized. Gold's certainly not decentralized, but you know what I mean, right? It's more decentralized than buying something like a stock, right? And it gives more distance to that. It's a different class of asset. Okay, so the fact that gold went up during the global financial crisis, and the fact that Bitcoin is comparable to gold, it's much more comparable to gold than it is to a stock, shows us that, hey, look, if the same thing happens, gold should go up and Bitcoin should go up during a recession. Okay, just because there's a recession doesn't mean no one has money. Okay, people still have money. They can still invest in assets. Okay, and usually it's the very rich people who invest in assets, who are trying to still interact within financial markets, who are looking for those alternatives. So gold went up during the global financial crisis. Gold went up during a recession where everything was going down. Bitcoin can certainly do the same thing now if everything starts going down, if there is a recession, because Bitcoin is very comparable to gold. It's literally nicknamed digital gold. That's the second point. The third point is this. I would argue that the charts show us that Bitcoin is much more connected to the DXY than it is to the S&P 500. Bitcoin is reverse correlated to the DXY being the US dollar currency index, which measures the strength of the US dollar, essentially, right? So if you look at history, what's happened? It's quite simple, okay? From 2016 to 2017, DXY dumped. What happened during that time period? Bitcoin saw a bull market to 20k, okay? It then went upwards from 2018 to the COVID drop, okay? What happened during that time period? Bitcoin went downwards in a bear market. When the COVID drop topped out, when the COVID drop bottomed out, the DXY started going down again. During that period of time, Bitcoin saw a parabolic run in 2020 and 2021, and then it started going up again towards the end of 2021, and during that period of time, Bitcoin saw the start of the bear market. It's recently topped out in around October, November. Guess what? That's when Bitcoin bottomed out. And ever since it's been going down, Bitcoin's been going up. So the fact of the matter is this, and it's really quite simple. Bitcoin is much, much, much more correlated to the DXY, a reverse correlation, than it is to traditional markets. And guess what, guys? The DXY doesn't really care where the S&P goes, okay, or traditional markets go. Yes, it is connected, but it's certainly not a necessity for the DXY to go upwards when the S&P 500 goes down. Certainly not. Okay, we've seen many deviations in the past. Okay, and you can see that by the shape of the chart. Okay, look from 2015. Look at what this chart looks like. It's barely moved. Okay, it's barely moved on the macro scale. S&P's pumped. Okay, so that's all you need. That's the only indication you need. This thing goes mostly where it wants. Okay, and therefore, if it's in a downwards trend, which it is, it's just broken a pink line. The last 2 times we broke this pink line, we saw a retest of the green box. It's heading downwards to the green box. It's in a yellow ascending channel formation that's been going on since like 2010. That's very likely to break to the downside. It looks like the DXY, based on this chart here, should be reaching the green box at around 88. Somewhere in that like late 2023, early 2024 region. Okay, based on previous trends, I've done a lot of analysis on this chart. You can check it out check it out in my last few videos. But essentially, the DXY should be going down a lot further, and hence Bitcoin should be going up a lot further. Okay, so that's very much worth noting as well. So the 3 points is this. The 3 points is basically this. Point 1, 4-year cycle. It's very strong. Hasn't been invalidated yet. Gold didn't go down during the recession. Bitcoin's close to gold, therefore why would Bitcoin go down? And the third point is the DXY is going down and Bitcoin's more closely tied to the DXY than it is traditional markets. So all those 3 points together comes with the complete argument that why would Bitcoin go down if there was a recession? Why? There's no evidence for it. So, I think people get very quick to claim things because they sound like they make sense in their head, but they haven't actually looked at the charts. They haven't actually analyzed the data. I'm not saying Bitcoin's going to pump. I'm not saying Bitcoin's going to 100K. I'm just saying it's not really supported in the charts to make the claim that Bitcoin needs to see 10K because there's a recession, which, by the way, isn't even guaranteed. So that's my view on it, guys. Ultimately, I'm going to end the video there. Thanks for watching. Hope you enjoyed, and I'll catch you in the next one. Before we end it, that was funny. Don't worry about it. Before we end it, I need to look at the Crypto Academy just briefly. Crypto Academy, become a trader, 10-unit course, developed by myself and Mega Well Crypto. If you want to learn how to trade, want to learn how to analyze charts like I do and like Mega Well Crypto does, who you probably know of by now, he's a separate crypto analyst. We work quite closely together. We created this course in May 2022. As of right now, we have around 87 students, and you can find out more information on the website and ultimately email us here at cryptoacademycourses@gmail.com, and we'll get back to you with all the relevant information so you can make an educated decision as to whether you want to sign up and become a student to that course. Thanks for watching, hope you enjoyed, for real this time, and I'll catch you in the next one.